Hi, this is Ian Coleman from PIA First. This is a video report on the FX majors for the week 30th of April. What we're looking to do is to first review the dollar index, then go to the FX majors, breaking down longer time frames to highlight basically what we're looking for in this coming week. So first, the dollar index obviously drives most of the dollar majors. Monthly chart highlights the last 4.5 months, if you like, of mixed volatile trading as we're holding inside this monthly Ishimoku cloud. Resistance to note here is 93.14, which is the cloud top. The weekly chart, we can see that the last move to the downside was in a bearish Elliott wave formation. We've completed the first 5-wave pattern, bearish 5-wave pattern, and we're now assessed as being in this this corrective move to the upside. Now we've got trendline resistance coming in at 96.08, and then we've got our 50% pullback level of this sell-off located at 96, the figure. So this area here is really our sort of medium to long term target, obviously just spiking through and breaking through this high from November 2017. If we go to the daily chart, a bit more of a bearish outlook on the daily chart for this week. So that was that last leg that we saw to the downside. We're now pushing higher in this corrective formation. We have stalled and seen a reversal on Friday at the trendline resistance, which comes in around about 91.85. However, the strength of this last rally would look for dips really to be limited this week. 90.88 is obviously quite a pivotal point. That's the last swing high, so it was resistance. It now becomes support. But we're looking to buy into dollar dips, and we're looking actually for the next move to move towards this Fibonacci confluence area around about 92.49. So that's a 61.8% pullback of this move, and then it's a 161.8% extension of this move. And we think that's going to be quite a critical target level, if you like, for the dollar index this week. So breaking that bias down into the FX majors, if we're looking to buy dollar dips, then we should be looking to sell euro rallies, or euro dollar rallies I should say. So the monthly chart, we can see a rejection. We're in a corrective channel formation. We see a rejection, quite a strong rejection of the 38.2% pullback level at 125.22. Weekly chart, wedge formation. We've had now quite a solid break to the upside. We had this quite a prolonged period of consolidation, made intraday trading pretty hard, but now we've seen this decent breakout. We're looking for rallies to be limited. The most we would expect to the upside this week is a retest of the breakout level, which is around about, let's just move that up one, it's going to be around about 123.40. To the downside, we've got bespoke support on 119.14, and that actually lines up pretty well with this 161.8% extension level at 118.97. Going to the last time frame, which is the daily chart. Here we actually saw a bounce on Friday. DMARC posted a 9 count. Now 9 counts normally highlight that you get a correction to the upside in this case within 4 candles, and we've seen that correction already on Friday. Now bespoke resistance is located at 121.39. That's just below the previous swing low. So again, it was support. It now becomes resistance at 121.58, and a break there, and we've got 122.28, which is obviously pretty close to that wedge reversal trend line. Cable, sterling dollar. Go to the monthly chart. Again, quite annoying that our trigger a couple of weeks ago actually missed the short trading sterling dollar by 3 pips. We've seen a very aggressive move to the downside. Monthly chart, we've got scope to engulf if we get below 137.11 on Monday. The outlook is bearish. Weekly chart, we saw some bearish divergence. We now believe we've completed a fifth wave, or even a fifth wave extension, just above the 261.8% extension level of 142.11. We saw a bearish outside week. We've seen continuation to the downside. We don't look to sell at the market now. 137, the figure, is trendline support, and we'd prefer to sell into rallies. If we break again to the, we're going to go to this time frame first, actually, the 4-hour chart, because this really highlights why we're oversold. Okay, 1, 2, this could potentially be 3 and 4, and then down in 5. We've broken through the 261.8% extension level, but we did see a little bit of upside movement late on Friday. So we're only really looking to sell into rallies again this week. The daily chart, 9 count, the same as euro dollar. So expecting a bounce to the upside. Resistance 138.74 and then 140.10 this week. One thing we should note here, if we do see a push lower at the start of the week and then a push to the upside, there is potential for a stronger correction and maybe to form a bearish head and shoulders pattern. So this would be the left shoulder, this would be the head, and choppy mixed price action taking it up again to around about 142.50, but we don't think that's going to happen. We think that sterling rallies are going to be capped here, and that's probably going to be worst case scenario for sterling dollar bears next week. Dollar Swiss been really hard to get a handle on this one, to be perfectly honest. Mixed and volatile. I don't know if I'd call it volatile trading. I mean, we've seen quite a decent trend now of 3 monthly gains, but 23 months of pretty mixed trading. We've got this trend of lower highs, of an ending wedge formation. So even if we do correct lower from this trend of lower highs, then we would look for dips to be bought. I mean, this month's Maribuzo level is probably going to come in around about 97, the figure. That's the midpoint from the open and the close. And a breakout of this wedge formation, and we're looking for a move to around about 103.50. So breaking down into shorter time frames, and here we can just see that trend of lower highs, spiked through it on Friday. We didn't close below it. This last move to the downside dipped under the 261.8% extension level, and then we've seen this rally higher. Taking down to the daily chart, a bit more colour. This is a 261.8% extension up here. Again, if we get to that level, would then be looking to buy dips. This week we've got support at 97.62, which is close to the 23.6% pullback level. So we'd only look for dips around here. Again, if we saw a break there, which we don't think we're going to, we've got bespoke support at 95, 97, and that's near this previous swing high of 95.70. So again, was resistance, now becomes support. But this is really our prime area here, which is around about 97.50 for dollar dips to be bought into this week. Dollar yen, I'm not going to say it's in no man's land. The monthly chart, we're looking for a bullish head and shoulders pattern to eventually form. Too early to tell really on this time frame if this corrective sell-off has come to an end. Obviously, the monthly chart would highlight if we close around these levels and a morning star formation, which would have a bias to take it further to the upside. Weekly chart, here we can see that we've had this dip bought under the 61.8% pullback level near the channel base, and we've had 5 weeks of consecutive gains in dollar yen. Daily chart, and I think this is quite important time frame to look at. We've got a 50% pullback here at 109.68, and we've got our bespoke resistance at 110 the figure. Now it is a weekly resistance level, and that basically means that we've got the potential to spike through it, but as long as we close below it, then it offers a downward bias. And in fact, if we go to this time frame, which is the 8-hour time frame, it's pretty close to a channel top, to a previous swing high, and to a 261.8% extension level. So we'd look for this area to cap buying this week, but on the dip side, we've also got support at 108.33. So buying dips, selling rallies in dollar yen this week. Dollar CAD monthly chart. Again, I'm not going to say mixed and volatile because it's a bit silly to say that in these higher time frames, but we've got 27 months of mixed results, and that's made this ending wedge formation that has a eventual bias to break to the upside. The weekly chart just shows you that wedge in a little bit more detail. We've got some trendline resistance coming in at 131.40. There's really no clear indication that this upside rally is coming to an end. The daily chart shows the last move in 5 waves, then down in 3 waves. Again, finding buyers breaking the channel formation to the upside and finding buyers near the 61.8% pullback level. Now, we saw a correction lower as that dollar index hit that channel top on Friday. But again, we're looking for that to be pretty limited. And the 4-hour chart highlights some trendline support at 127.87 at the beginning of next week. We've got bespoke support at 127.73, and then we've got this 38.2% pullback level around about 127.54. So again, looking for this zone to catch a bid again next week and for buyers to return. Aussie dollar. Let's go to the monthly chart first. In a huge expanding wedge formation, this area has been pretty pivotal. We've seen a rejection of gains into the Ishimoku cloud, and we're looking for an eventual bias an eventual break to the downside. Obviously here, again, we've been consolidating, if you like, or slight consolidating up for the last 31 months. The weekly chart highlights Aussie dollar breaking the wedge formation to the downside. Okay, reverse trendline resistance this week is going to be at 76.40. Okay, so a potential for a retest before moving lower. Believe it or not, the downside target for this wedge breakout is 68.26, which is the start of the wedge. In fact, we're just going to put a Fibonacci extension level, if I can find it, on this chart, just to see if we get a 423.6% extension, or where the 423% extension is, which is just below here. Commodity currencies have a tendency to push through the 261.8% extension level and move down to 423.6. Obviously here we've got 75.13, which is pretty close to last week's bearish price action. So daily chart, and we can see basically while we've bounced late on Friday, okay, 76.40 is the resistance level for this week. So 76.40, 76.40. So we're marrying up with our bespoke resistance and our trend line or reverse trend line resistance of that wedge breakout. 76.40 looking to sell, and then obviously 75.13 area, 75 the figure, will be the downside target. In fact, just to show this time frame, we broke the wedge formation to the downside very quickly, made the target level. We could just see a bounce off this 161.8% extension, as long as 76.40 or as long as 76.53, I should say, doesn't get broken, then this trend of lower lows and lower highs remains intact, and the downside bias remains intact. Euro sterling, just going to go to the weekly chart, because this is the most interesting, if you like, of all the time frames. Here we've got 161.8% extension level at 83.01, okay, and that is from this first wave. Now the reason I'm highlighting that is because we've got our monthly bespoke support located at 83.14, and we've also got these areas here which used to be support. So this area, sort of 83, the figure 83.50 is our long-term target area for Euro sterling. So we are long-term bears, and we do see this as being a short-term recovery. Here is the 4-hour chart. We can see quite an impulsive move to the upside, then this correction lower. Bad UK figures, sterling figures on Friday, saw obviously sterling move to the downside, and Euro sterling move aggressively higher from this 61.8% pullback level. We're looking for this move to be corrective, okay, and we're actually looking for it to be an ABCD formation. Now we are long at 87.14. We've got a stop now pulled in quite close, but we're only looking for an ABCD formation up towards 61.8% pullback level, and maybe a spike through to 88.53. And if you note here what I've put on the chart, we've got a 13 count there on the daily chart, and that highlighted a low. It's a DMARC exhaustion count, and we've also just posted a 13 count on the 4-hour chart, so limited upside, but there is still scope for buying at the beginning of the week. Euro yen, still one of my favourite pairs, if you like, to concentrate on. Bearish outside month. Marubozu level was located at 32.76, which is the midpoint from the open and the close, and it acts as resistance. We actually made a high of 133.48, so we did spike through that level, but as long as we close the month below that Marubozu level, then that Marubozu level is regarded to still be intact. The weekly chart, where are you? And again, this is sort of probably our favoured time frame, if you like, in this major currency pair. We've seen a bounce near to 129, the figure. We've then seen this rejection. This is the most important factor here. The 261.8% extension level is located at 115.14, and that's very close to this previous swing low, and that is our medium to long term, I suppose, target level. Also, just note here, 123.70, the 161.8% extension level, pivotal. So we are expecting, a bounce, a corrective bounce around that level. If we go to the daily chart, here we can see that we've rejected levels close to the 50% pullback level at 133.20. We've had a decent sell-off. Now, Friday, there was an intraday 13 count, again on DMARC, I think it was 4 hours, and we couldn't sort of sustain the move to the downside. So I still think that this currency pair offers quite a decent short entry, just bouncing into small rallies, if you like, going into the beginning of this week. Very important factor is the trendline support coming in around about 130, the figure, and that's going to be highlighted when we go down to the shorter time frame. So the shorter time frame here, I believe that we're going to form a bearish head and shoulders pattern. So this is the left shoulder, this is the head. Now bespoke resistance is located at 132.50, and selling into that minor rally really offers quite decent risk reward this week. A break of the neckline, let's just see what level that comes in at the moment. Okay, around about 131.87, and the measured move target is 130.20. Now, if we go back to our daily chart, that's near that trend, very close to that trend line support, and in fact, we just moved it up on days, if you like, then it's going to get closer and closer. So the bias this week is to sell into mild rallies in euro yen and focusing on that 130.20, 130 area. Okay, thanks guys. I hope you enjoyed the medium-term video analysis, and we'll see you next week with another update. Thank you.